Greetings, members one and all of the Salivation Nation. Are we about to see an economic downturn as the onset of tariffs start to take effect? And are we about to say goodbye as a result to summer doldrums? And the things are about to heat up for gold. We shall see. According to this piece, it could possibly be the case. Gold has been held back by a stronger U.S. dollar, but the yellow metal could get a boost if the Federal Reserve reins in the rate hikes, according to Chris Mancini, research analyst at Gabelli Funds. This is also coming to us from Kitco News. Gold has been held back by the stronger U.S. dollar, but the yellow metal could get a boost if the Federal Reserve reins in on rate hikes. This according to Chris Mancini. And I think ultimately drives the gold price will be the Fed pausing and then the market pricing and the Fed easing. And so if the Fed is easing while the ECB, European Central Bank, is printing, and the Bank of Japan are both printing money, then I think gold will do really well, according to Mancini. The commodities analyst noted that while tailwinds may be present for gold, he expects the yellow metal to trade range-bound for the remainder of the year. And I think that gold will be range-bound for the rest of the year between this $12.50 an ounce and the $13.50 range. And as most of you know, I think that it could possibly get up even higher to close to $1,400. And silver will follow as well and could possibly go to $20. Mancini said that for the short term, speculators are driving down gold prices as they buy U.S. dollar futures and short gold futures. The stronger dollar has been due to this kind of trade war that's been going on between the U.S. and China, and so it's really been a haven trade. Mancini added that the Fed will only likely ease up on hiking if macroeconomic conditions worsen. I think what gets gold to really move will be a view that the economy is going to slow and the Fed is going to halt its tightening cycle. And it's interesting because we're seeing some results of the trade war. I guess we possibly could be in a trade war now. Certainly barbs back and forth with the European Central Bank, and we're seeing Harley-Davidson move some jobs over to as a result. And of course the tariff is simply a tax, and when you raise taxes, well, that does cause some problems with the economy and just stifle economic growth. Although I understand the reason for Donald Trump's trade war, essentially, or him raising hikes, because he feels like the United States has gotten a raw deal for a very long time. He's been talking about this type of situation since the 80s, at least. And certainly there's hopefully out of this, perhaps both, or the negotiating parties with the trade wars between Canada, Mexico, the ECB, the European Central Bank, or the European Union, and China, perhaps some deals will be made and we can forego some of these high tariffs on both sides. Really, there should be free trade between countries, but typically that isn't the case. And of course, the people who get hurt the most are the people who participate in the economy whenever there's taxes raised. And of course, with what's going on with the tariffs, there's a chance that possibly the Fed, as mentioned in this article, if they see economic downturn and see job losses or stagnation in the job market, well, that could lead to the Fed not raising rates or maybe even lowering the rates. And if that happens, well, you're going to see gold go up and silver too. But if there is some sort of deal made, well, gold and silver may stay down as the summer months continue and as economic growth continues. Then that means demand, especially in silver. And I think if you see demand in silver, then I think you will see prices spike up, and that ratio between gold and silver will tighten massively. It's anybody's guess to see exactly how tight that will be, but right now we're seeing an unusual gold to silver ratio, and what will happen as a result of things occurring with the trade imbalance and war that's going on, we shall see. So far, no one is bending, and the trade tariffs are starting to take effect. And so we will see what happens the next time there are reports made to see where economic growth. We'll see what the GDP is and where things go from there. The prices of things, especially autos, that's where you're going to probably see it first, is in the auto industry and auto sales. The prices for new cars going up. And I tell you what, there's been a record sales. There's been a lot of sales of automobiles, brand new automobiles, for quite some time. I've never understood that with the amount of debt that Americans carry. They are buying new cars like it's going out of style. It's crazy. But nonetheless, that gives us opportunity. And as the prices are still low for gold and silver, to pick up more things of real value, withstanding value, gold and silver. And if this thing does heat up, stackers win either way, because these low prices in the summer months is typically the case. They tend to stay low, but we will accumulate. And if the economy does stifle a bit because of this tariff and this trade war, well, then it just proves, when the prices increase in precious metals, it proves our case that the metals are doing what they're supposed to do. They're reacting to an economic situation and serving their purpose as an economic safe haven for individuals when we become our own central banks and hold these precious metals. So it'll be interesting to see. This article predicts that we're going to see things heat up with gold and silver very soon. I think especially for silver. It's going to be a very fascinating thing to see what happens with silver in the coming months, because if the economy does go in a downturn and there's less demand for electronic products because of other metals associated with the tariffs, well, then there'll be less demand for silver, which means that it could actually stay at the same price, and we may see the gold to silver ratio widen instead of narrow. We shall see. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.